Rick, it's great to have you back. I think it's the first time we've heard from you post-election. Welcome.
It's good to be here. Thank you very much. Good to see you.
Are there animal spirits and hopium in the air, or is that just a stock market thing, or at least until today?
I don't even know what that means, Kelly. So you got me on that one.
Are you excited as a business owner? It's going to be, I was going to say the tax cuts, but I don't even know. I don't think there's, we already did corporate tax. So I guess personal taxes maybe aren't going higher. I don't know.
Listen, I think it's a very interesting time, for sure. We're all living in a very interesting time. I would tell you from the consumer standpoint, from the retail standpoint, it's really great. You just talked about the numbers that are up, but on the ground, on the properties, what we're seeing is continued growth, both in sales per square foot. We're seeing continued amount of people on our properties and a strong demand for retail space, which to me is the best metric. And we employed a strategy that's paying off, and we've got double-digit growth this year. So I think the consumer is in great shape. And I'm excited about that. I think everybody's going to be excited about going into the holiday season.
Does that surprise you, Rick, that we are in as good shape as we are after everything the Federal Reserve's done? And especially, I don't know if they're going to be able to keep cutting rates here.
Yeah, I don't know if the rate cut is going to really impact the consumer that much, to be honest, at this point. But here's what you have. 2/3 of Americans own a home. Home values have increased. So people that own a home are feeling wealthier. The stock market is at an all-time high for the most part. So people in their retirement accounts are feeling wealthier. And what we're seeing is they're spending. Now, the majority of spending is happening at the high end, but it's really at all levels. So we see at our property, the luxury sector is doing very well. We have some luxury tenants that are up 30% in sales. And also the Gen Z, which we have focused on because they love these shoppable experiences and they're into shopping with their mom and their family. We have retailers in that category that are doing $4,000 a foot. And then in the middle, you have aspirational that's doing well. The Lululemons, the Ala Yogas, the Sephoras. So if you're a best in retail class, I think you're going to do very, very well. And the consumer is going to reward you for putting out the product that they want and the experiences they want to enjoy.
But what if you're not? Rick, you mentioned aspirational. Lulu has hit some headwinds lately, and we keep seeing data and numbers suggesting that a lot of consumers, especially the working class consumer, is putting more and more on the credit card and is being more and more pinched by rates that are higher for longer. How long do you think before that starts to show up in the broader environment and maybe even starts to affect the lower end of that luxury cohort?
Yeah, and it's a good question, John. So on the Lulu question, what you have is a lot of competition. You got Ala Yoga, you got Viore. They're all very competitive, and they're giving Lulu a run for their money. And I really have confidence in the leadership at Lulu that they're going to figure this out and the growth will continue. So I believe in that category. It's not going away. It's only going to grow. In terms of the consumer, you're right. More is being put on the credit card or pay later. But the rate drop that the Fed would do probably isn't going to affect directly the credit card rate, right? At a certain point, that is going to break. When it's going to break, I don't know. But you can't continue to be racking up, debt at running at 20%. But right now, what we're seeing for the foreseeable future is spending is going to continue. People are feeling wealthier. And I think we're going to have a really good first quarter after the holidays, too.